Welcome to the Cambridge exam, taking you through IGCSE Accounting 0452. This is question 1 of the exam, which is the MayJune 2023, and we're going to take you through that. And if you can do this along with me on your paper, that will be really helpful. First question we're asked is all around the Cashbook. So the Cashbook's for OMA, and OMA has these transactions in it. We can see that there's already some information in there. We've got an opening balance of cash. On the debit side, because cash is an asset, we'd expect it to be here. Cash could never have a credit balance. But you'll see that the bank account has a credit balance of $477. That means it's a negative bank account. They've got a bank overdraft. Credit side is where we have our income and our liabilities. So here our bank account's an overdraft of $477. We've got these transactions that we're going to go through, so if you can write them as we go. So the first one, Omar's a trader. Transactions took place in April 2023. So we're right on that one. The first thing that happened is we paid $1,000 into the bank account from his personal money. So that happened on April the 3rd, so we'll just put the 3rd. Now when we write in here, we write the name of the account as it would appear in the trial balance. So the owner putting money in to the bank account, that's OMA putting money in. What we write is where that would go in the trial balance. So for a sole trader, we've been told it's a sole trader, that's going to go into a capital account. So we can't write personal anything, and it's going into the bank account, so we're going to put 1,000 in. Remember that the debit side here is in and the credit side is out. First one done. Second one, paid $360 by telephone transfer. So that happened on the 4th. Is that money coming in or out if we've paid it? So we're going to put it in the out. And that's to a supplier. We write the supplier's name because that will be credited against that supplier's account. And we're paying $360. Telephone transfer, so that won't be cash. That will be the bank account. So we're going to put $360 into the bank there. That's out. Second one done. Third one, on the 10th, cash sales, cash, so that's good. It tells us it's going to be this one. Is the money coming in or out for cash sales? So hopefully you've said in, and we just type sales. We don't need to write cash because it's that's not what would be in the trial balance. Also because it's a cash book, of course it's going to be cash. So we're going to put $695 into the cash account. That's the third one done. On the 12th, purchase goods on credit. Because it's on credit, is there any money that changes hands on that, or will we pay Alexander later? That's right, we'll pay Alexander later, so that's not going to go in here at all. We paid $68 cash for petrol, so it's cash, so it's going to come in the cash. If we've paid it, is that going to go in or out? Great, so we'll put it in the out. Put the date 15th. And we don't write petrol. Petrol is not something we have in our trial balance. So what would you call petrol in the trial balance? So we'll call that motor vehicle expenses. And we're paying it, so $68. It's going out of the cash. Great. Paid rent by standing order. So paid's going to go out, 16th. And standing order, that doesn't sound like cash to me. It sounds like an automatic payment. So we're just going to type rent. That's a payment. And is that going to come out of the cash? No. Come out of the bank account, $400. Remember, each one of these is worth 1 mark, 11 marks in total for this question. 11 marks actually takes you almost to the bottom grade on this, so it's great to get there. After rent, we received a check from a customer in full settlement of an invoice. So we received, so that's money coming in. So I'll put the date there on the 23rd. And a check's not cash. We'll put the customer's name because that will be credited against that customer's account. And that money coming in, $384, so that's how much the check was. And in full settlement of account, so we're going to bring that customer $16 discount. So that'll make up the $400. On the 27th, we paid a check to Alexander. So payment is money going out, so it's on the credit side. and it's going to come out of the bank. Paid $323, so that's the amount we paid with a $17 discount. And the last part, we purchased goods on credit. Again, it's on credit, so it's going to have nothing to do with this cash book here. So once we've got that all up, we just need to total our accounts to get a balance of each. Leave a line here. I'll cheat because I'm using a spreadsheet. And this one here, you could probably do it just as quickly in your head. Oops. And I'll fill that across. Okay, and so what we need to do now is find out the balancing figure for our cash and for our bank. So what we do is we've got our totals here. You'll see in the bank there's a total 1560. To balance that up, I need to add the difference between there and there. Hopefully I don't get a circular reference. And that's going to be my balance, which will carry forward. And if it's on this side, we'll carry forward to the other. And then the opposite here, let's have a look at the difference in cash. So we've got 68,815. Oh, so we're going to have a balance on this side too. And that balance will carry forward on the 1st of May. So we've got quite a bit of money in our cash there at the moment. So just pause that one, make sure that you've got that all correct, get all those figures in. And we'll get on to question 2. So question 2 is looking at, I think, Alexander's account. Alright, next question, which is question B, I believe, is that we're trying to do Omar's account. Omar starts off with an opening balance already given to you of 360 in the credit. That's because Alexander is a supplier that we owe money to. So we're going to start off with that balance. That's what we owe, 360, and we're going to just change these things based on what happened. So if we're looking through, see the first thing happened on the 4th, 360, paid 360 to a supplier, Alexander. So we're going to show that payment in. That date is on the 4th. And the other account, when we pay it, it's going to be a debit to Alexander's account, but the credit goes to bank because it's coming out of the bank account. So we type bank there. Remember, in these ones, we type in what's in the trial balance. So that one, that would end up in the income statement or balance sheet. So I'm going to put 360, and basically at that point in time, Alexander accounts is 0. We've paid everything off. Until we get to the 12th and we purchase goods on credit from Alexander. So again, this one here is we owe more to Alexander. This one we owe less to Alexander. Just put that as so we can see our debit and credit side. And in this case, we owe more because on the 12th we purchased more. Oh, that's not going to work. Because we have April, we don't have to write the April again. And we're going to call this purchases. And we're going to add 340 to the amount that we owe Alexander, so we owe more. Then looking through, we've got the next thing. On the 27th, we paid 323 and had a discount there. So the 27th, because we paid, we're going to put bank. I'm doing this as 2 separate amounts. Paid a check for 323, and then we had a discount of $70. and this is discount received because we're getting it. And then on the 28th, we've got purchases. Well, what's quite nice is that they all cancel each other out, so we can see that we've got a closing balance. Again, we'll add up. Higher side first. Oh, whoops, that's not right. Higher side first. Right, see that 935 is the higher side, so we'll transfer that over. And take it away to find out what's left up on the side to add both sides to 935, and this will be our balance at the end, which we'll carry forward. Date on that one's going to be end of the month, 30th. Good, and we'll carry that balance first forward. Brought down. Piece of cake, well done. The last question that you've got is advise Omar if you should choose to purchase from Alexander or from Tahir as well. The information that you've got is that Omar buys all his supply from Alexander, who does not allow Omar any trade discount. Omar is now considering also purchasing from Tahir, who would give him a 3% trade discount, but no cash discount. Notice that we did get a discount here, so that's quite nice. You've got to choose whether or not you're going to advise Omar whether you should just purchase off Alexander only, or Alexander and Tahir. First thing that's most important in here is that you actually give an answer. So we'll just write C here. So put your recommendation first, because that's definitely worth 1 mark. It doesn't matter which one you choose. We'll choose both. Omar should buy off both. You could choose the other one, just off Tahir, if you liked. Off Alexander. The reason why, so it says in the question, justify your answer by providing 3 advantages and 1 disadvantage. So we need 3 advantages. Each of these advantages are worth 1 mark. If these are a competitor, then it might help reduce overall prices. We might have Tahir may have different stock, and also Tahir gives a what sort of discount? 3%. And that's relatively guaranteed, whereas we are not told if Alexander may not be guaranteed. And then the last thing you asked for is 1 disadvantage. And Alexander, well, you could say that there's a little bit of loyalty in there, and so Alexander might be unhappy. But I'm going to say that that we know quality. There we go. 20 marks straight away. Well done. All right, make sure you got all those answers in. Great. We'll see you for question 2 next.